the squeeze zone indicator. All right, what's going on, guys? Welcome to the Trade Grid. Today we are going to cover over the squeeze zone indicator. I'm going to discuss just quickly some strategies on using the squeeze zone indicator. But before I cover this, I'm going to throw it over to Ava to break down the directions on using the squeeze zone indicator.
It automatically plots support and resistance levels on the chart during periods of volatility squeeze. You have three plotting methods: from high to low, from open to close, linear regression, experimental. The levels are color-coded: red, weak, one-sided volatility squeeze; orange, typically strong, no volatility issue. You can have a double red zone, where both buying and selling volatility has dropped. Combine this with the empirical suite or your favorite analysis tools for extra confirmation. Cheers.
All right, guys, we're going to get straight into the squeeze zone indicator. Very easy indicator to use. This indicator identifies squeezes the market using support and resistance levels and allows you to see different breakouts. So I'm doing this inside of TradingView on the 5-minute time frame. The ticker is going to be SPY. And we're going to be using Hikinashi candles just to kind of give you guys a more cleaner and clearer idea on how to use this. So this was also back tested on Trader's Edge 50 to 100 times to give you guys a win rate percentage on this indicator. So let's get straight into it. We're going to go to indicators. Top, I'm going to type squeeze zone indicator. Let's click that. And as you can see, extremely simplistic. We have a orange support and resistance line, and we have a red support and resistance line. The orange support and resistance line acts as the strongest support or resistance, right? So it can be a support, it could be a resistance at any point. Now, the red line itself indicates as a weaker point, which means the market could break through this line at any time, or it could bounce off. So you always kind of need to be, keeping an eye on whether it's going to break through or not for it. So as we can see through a couple examples here, that the market never, while in a squeeze, the market never broke through these orange lines. See, these orange support resistance lines, the market could never break through them, but they did break through the red support and resistance lines because these are the weaker sides of the market. So when you're watching this indicator, put on the 5, 15, 20, I've tried it on the 1 hour too, and this thing works great. You can see something like this where the market ran through the stronger support orange line, ran through the weaker support, and actually broke through. So you have a breakthrough right here. Then you have another follow-up right here again, where it went through the stronger support line, went through the weaker resistance line, and broke through to the upside for it. So this was pure money straight up here after it broke off of the stronger support line. Support line is running by like an 80%. I have seen small portions of the market where it didn't hold up, which you're going to need more confluences. So I'm going to add another one on top of it. It's going to be a buy and sell indicator. Let's go to the indicators portion up top here. Let's type in Pokey indicator, and we just really want to see as an additional confluence to the squeeze zone indicator if we can get a little better idea of how to use this as a strategy. So I'm going to take these off here. I'm going to disable a couple of things to clean up the chart. The chart's extremely messy. Take all these off here, and we're just left with buy and sell signal. So I mean, you can use this as a breakout indicator where it's squeezing between zones, and once you see it leave the red zone, you can consider that as a breakout. You can also use it as a bounce or reversal indicator where you see the market getting ready to bounce off the orange strong support line and go to the upside, or bouncing off the top of the stronger support line going down to the resistance line. So something like this, you can see right here, this is, let's see if I can open this up here. This buy signal right here could act as an entry level if you were following it and you understood that the market was in an uptrend. You can use it right off this line here as it rides up. It's going to hit this support, it's going to hit that resistance line, but it's going to be obviously a weaker resistance line and it may not hold up. So if you're in a trade like this, you could take this as a quick run up, and as you can see, the market continues to keep going up. It went through another squeeze again, bouncing back and forth between the stronger support and the weaker resistance lines, and then broke up again. And clearly this is in an uptrend right now, so it's easy to identify this. If you do want to add another confluence on top of this, we can add something like an EMA just to give us a cleaner idea. Type in EMA in the indicators tab. Get a cleaner idea if you should be taking trades on the buy side or trades on the sell side with the EMA. And we can always use the 200 EMA. So I'm going to go inside EMA, go to the settings, I'm going to go to input, I'm going to type in 200. And the 200 is going to be our identifier to whether to take trades on the upside or downside. So like I said, this trade would have kind of been a decent trade here, right? Because it's breaking over. Anything that's over the 200 EMA is going up. Anything that's under the 200 EMA, we're going to be looking for to take the sell calls or sell signals, right? So this is another one right here too. So identify this one here. This was a bounce off the strong support line here. We got a sell indicator, and it bounced. We're underneath the 200 EMA, and it bounced off the strong support line and went down. And we could have gotten this whole trade right here, this whole entire move right here. It's up here. We could have taken this whole move. This was all profit, entire profit. Set a stop loss here, top at the last high, and we could have taken this whole thing as profit. I mean, this indicator, from what I'm seeing from back testing this on a couple of different time frames, this is incredible. So without further ado, I'm definitely going to give this indicator an A. Right, I'm going to give it an A for the fact that it's very simple and easy to use, very easy to identify as soon as you put it on the charts. And this is one thing I always stress in trading. If you can't identify an indicator immediately when you're looking at it, don't use it. Don't risk it. Don't blow your account. Don't go poor. Don't end up in the poorhouse by using indicators that a lot of these guys on YouTube haven't even back tested or even can remotely even explain how easy these things are used. I would definitely use this in my day-to-day trading. I've used it before in the past, and it worked out great. So I'm gonna stick with my grade on this. I'm gonna give this thing an A. I mean, look at this. Look at these bounces. I mean, pure profit, pure profit. I mean, look, it bounced straight off of this here, right? We got a buy signal. We stayed with it. We understood that this was a weak support line. It could reject, right? So we could either ride this up and get out of the trade, or we could have kept it going. Profit. Profit. It's ranging, squeezing, going under. Profit. Profit. Bounced off this stronger support line. Profit. Incredible, incredible, incredible indicator, guys. So like I said, I mean, very simple, very simplistic. You can add a bunch of different confluences. Just make sure these confluences are back tested. Don't just throw up any random buy and sell signals, any random oscillators at the bottom, RSIs, MACDs. Make sure these are tested. Make sure they work accurately with a indicator like this. One thing about a lot of these indicators is they usually work in trending markets. So when the market's trending up or the market's trending down, they usually work really well. When they're in ranging and choppy markets, you can always run into a lot of problems. So know the difference between those two markets. Know the difference between a ranging market that's really choppy, and these indicators may show weird false signals, and the difference between a ranging market where these things can work at an 80% level. So I'm going to give you guys the breakdown through Trader's Edge on what I came up with after back testing this strategy. All right, so I'm in Trader's Edge. We back tested this strategy. We ended up taking about 50 trades with this. We came up with a 78% win rate. And this is actually ranked 79.35 out of all of the indicators back tested through Trader's Edge. If you guys don't have Trader's Edge, this is actually an amazing platform. I'm not sponsored by them. I just want to kind of throw them out there just to show that this platform itself is amazing when it comes down to utilizing a system to kind of show where the performance is of what you're trading. So yeah, guys, we ended up with a 78% win rate. Incredible. I mean, very, very strong indicator to use as a second confluence. I would not use this as an only way to trading. You would definitely need more confluences. Confluences are additional indicators to help you strategize and come up with a nice strategy for this. Like I always say, follow these 3 rules here and you will continuously be successful in your trading journey. Until next time, guys. See you.